So when there's a good bull market going on, the person who says this might be getting overvalued, you better be careful, he's sort of dismissed.
Warburg's prediction fell on deaf ears, and between May and September 1929, 60 new companies were floated on the New York Stock Exchange, adding more than 100 million shares to the marketplace, fueling the investment bubble.
You hear the same things in every bubble. This time is different. It's a different financial world. It's a new financial world.
In September, the market became increasingly volatile. Behind closed doors, President Hoover's unease was growing.
Five days later, the stock market crashed.
No one knows what triggered the sudden loss of confidence that happened at the end of Wednesday, 23rd of October. But out of nowhere, a sharp fall in automobile stocks provoked a frantic last hour's trading. The next day, the great crash of 1929 began.
October 24th, 1929, Black Thursday, is often considered to be the beginning of the crash. There was really a tremendous drop which scared a lot of people.
Desperate for news, thousands gathered outside the stock exchange.
Tremendous crowd standing there, very grimly staring ahead.
15 minutes before the opening bell on Monday, October 19th, the New York Stock Exchange is bombarded with sell orders.
We came in and we were absolutely convinced they were going down.
$500 million worth of stocks are sold instantaneously.
You can't buy it. 5 units are trading, 6 units and 7 units are trading, 8 units are trading at JP with Merrill Lynch coming in buy side all the way up from 95 up to the Vision 05.
Stocks opened 10% lower than Friday's close.
Everybody wanted to sell. So that meant some well-known companies couldn't even open for trading for hours. Exxon, the world's biggest oil company, didn't begin trading for nearly 2 hours after the stock exchange opened. IBM was an hour and 15 minutes late. Shares of Walt Disney couldn't even begin trading until 11:12 a.m.
25 years ago, buying a stock was not an instantaneous process. A customer would begin with a phone call to his or her stockbroker. The broker would take the request and pass it to the firm's trading desk. A call is then made to the brokerage firm's booth clerk on the floor of the exchange. The clerk writes down the order and passes it to the firm's floor broker. The broker then walks to the trading post where the stock trades. There, the broker finds the specialist who finally executes the customer's order. However, for those with access to the technology, the process is as simple as the click of a button. On Monday morning in New York, thousands of computer programs are triggered, selling billions of dollars in stock from around the world. By 10 a.m., sell orders had reached $1 billion. Computers on the exchange floors could not compete with those of the arbitrageurs.
Program selling taken to the ultimate art form, as Wall Street's very biggest players stepped in and unloaded multi-billion-dollar blocks of shares.
The volume of orders overwhelms Wall Street's machines. It releases a statement.
Markets are very different today. We live today in an incredibly efficient marketplace.
That doesn't really tell the whole story again because so many stocks have yet to open. Just to give you an indication or as to how some Dow components are trading this morning, we have GE, of course, the parent company of CNBC, trading down $1.30 right now at $17.50 a share. Of course, it's lower open expected, and we are expected to go lower right now off the 252-point decline that we have. Of course, coming into it, we had a global sell-off. We had Japanese stocks down 9%, the Hong Kong markets down.
Get in stocks over bonds in the long term. It's due to volatility. Don't let volatility shake you out of the market. Don't let volatility upset you. Let's ride this out and capture the extraordinary value that we see in the market today.
It's going to be one of the watershed days in financial markets history.
It was a manic Monday in the financial markets. The Dow tumbled more than 500 points after two pillars of the street tumbled over the weekend. Lehman Brothers, a 158-year-old firm, filed for bankruptcy.
I don't think anyone really expected a bank as big as Lehman to, be in the position that it's in now.
Meanwhile, Merrill Lynch, fearing it could be next, agreed in an act of desperation to a shotgun marriage with Bank of America.
It is definitely a very, very difficult time, and it's not going to get better quickly.
So in just 6 months, 3 of the 5 biggest independent firms on Wall Street have now disappeared. Bear Stearns, which collapsed last spring, Lehman Brothers, and Merrill Lynch. Insurance giant AIG is the next name on the list of troubled companies. It's looking for $40 billion in bridge loans.
Some people say this doesn't stop until the housing hits bottom. You think that's true?
I think that's probably correct.
Veteran trader Art Cashin believes there could be more casualties.
This is the 5th time we've seen this movie. And you sit on the edge of your seat and you yell at whichever character it is, don't go into that woodshed. But they keep going in.